Welcome back to EDU-Tutor. Today we're going to be looking at Principles of Accounts, May, June 2024, Paper 2, Question 3. If you want to see other videos on Paper 1 and 2, you can click the link above. Alright, so let us start with Question 3. Question 3 says, Ban and J are partners sharing profits and losses in the ratio of 3 to 2 respectively. At the end of the financial year, the 31st of December 2023, the following balances were extracted from the books of the partnership after calculation of the gross profit. So they have already calculated your gross profit for you, and they've given you your gross profit, your operating expenses, non-current assets, provision for depreciation, current accounts, and the rest of those items. They said additional information. Your closing inventory at the 31st of December 2023 has been understated by 3,500, and non-current assets are to be depreciated by 20%. Alright, so we should go ahead and create an income statement for the partnership. So the first thing that you should do is to label the table. So it's the name of the company that you are making the financial statement for, which is P&G, and you need to also put the date. So the income statement for the year ended the 31st of December 2023. All right. Then the next thing is that you're going to put in your gross profit, because remember, they did the rest of the income statement for you. Second thing, please note that there was an additional information given that said that inventory was understated. Now, how is that important? When your inventory is understated, it was not subtracted from your cost of goods sold. So therefore, the amount of money that we subtracted as cost of goods sold is too much. And therefore, we need to add back this closing inventory to your profit. So I'm going to go and add it back to our profit. So add inventory understated of 3,500, which will give us a total of 287,500. Alright, so that is now the corrected gross profit. Then we go back up, and we're going to look for all the items that affect our income statement. So we see expenses, we see depreciation. We're going to pick up those items. Interest on loan. Okay, that is related to their capital. So let's go ahead. We have an operating interest of 107,000. Let's look back at depreciation. So they told us that there's an accumulated depreciation of 215,000, and the non-current assets cost price is 695,000. Now, since we're doing the reducing balance method for depreciation, and they said 20% should be charged, this is how we would calculate the depreciation. So when you're doing reducing balance method, it is the cost of the asset minus total accumulated depreciation multiplied by, so after you do that, so let me put that in the bracket, you need to multiply the figure by the rate, depreciation rate. Alright, so let's pick up the figures now. So that gives us 695,000. Let's show you where we get the 65,695. We just went through it. 695,000. That's the total cost of the non-current asset. And then we have an accumulated depreciation of 215,000. And then we multiply it by the 20%. So you can check this answer to ensure that you have received or you understand. If not, please put a comment below and I will try to assist you. Now you can put everything in your calculator as one, put the brackets, and you will get the 96,000, which is on the screen. So the answer here is 96,000 for depreciation. Now, please note, as I said before, there was a loan and we have to pay the interest on the loan. Now, the loan amount was, let me see if we can pick that up, 25,000. And there's an 88% interest. So, we're going to put loan interest. And I'm going to just put the working out here. So it's 8% multiplied by 25,000, which will give us that. Let me see if I can also put the depreciation workout here for those who missed it. Alright, so that's how we got that answer. So you're going to put in your calculator 8% multiplied by 25,000, which gives us $2,000. So this is our total expenses because if you scroll back up, you will notice that we don't see any other expense. You can correct me if I'm wrong in my comments. However, we're going to subtract these three. So add these first to get a total. So when you add, you should get 205,000. And we make a note that this is total expenses. And then when we less the total expenses from our updated gross profit, we will get 82,500, which is our net profit. So pretty simple question. Just remember that if there is something that affects inventory, it will affect your gross profit. Alright, so that's 9 marks. Then we move on to prepare the appropriation accounts for the year ended the 31st of December 2023. As said before, the first thing that you need to do is head up your statement and J, and then I'm going to have appropriation. Put your dollar signs. All right. So let's look at So remember your appropriation account always starts with the profit. So let's look at what that profit is, which we just worked out as 82,500. So this is the profit we're going to share between the partners. So the first thing is that we're going to need interest on drawings because that's the one that we're going to add to our profit. So we add before we subtract. So there is interest of drawing of 3,200 for ban and 2,700 for J. This is where I'm picking it up if you're not seeing it. So I'm going to say add interest on drawings. So ban first, then J. Ban is 2,700. J is 3,200. 3,200 plus 2,700 will give us 5,900. Now you're going to look for the other things that you need to share. So we also need partnership salary and we will need interest on capital. So you can just pick up these three figures that we're going to need because we need to list those. So you will now say less. And this is ban. And we also have J. So we have 36,000 here. 8,400 was for J for ban and 7,800 for J. When you add these three figures together, you will get 52,200. So now you less this figure and you add this figure to your gross profit. So put all of that into your calculator at once and you will get your answer, or you will get what this figure should be down here. So that's 36,200. So that is your residual profit. And remember, if you don't know, residual profit means the profit that you need to share between the partners. So the residual profit is what we're going to share between the partners. So they said that the profits to share the residual, the ratio to share the residual profit is 3 to 2. So ban will get 3 and J will get 2. To work that out, you are going to use the ratio. So let me show you something over here. If the ratio is 3 to 2, the format to find out how much each person should get is that you're going to add both numbers to give you the denominator. So that's 5. And we're saying that ban should get 3. So we put the 3 over the denominator and multiply it by the profit. J, on the other hand, should get 2. So it's 2 over the denominator, which is 5, which will give you the profit. So for ban, I'm going to put it here. Ban should get 3 over 5 multiplied by 36,200, while J should get 2 over 5 multiplied by 36,200. That will give us 21,720 for ban and 14,480 for J. And if you add both items together, you will get the residual profit. So you're just going to put that over here to make note that both of your sides are balanced. Alright, and that would be your appropriation account. Let me just scroll up so that if you are making notes, you have everything. Also, if you some of these could be placed up a little more so that everything could hold. But because of how I wrote it, 2 items were left off. Alright, so the last part of the question now says that we should create the current account for the year ended the 31st of December, and we're creating J's current account. So we can just put the information J's current account for the year ended the 31st of December 2023. So it's date, details, amount. And we do the same for each side. So it's days, details, and amount. Alright, so remember that we're going to be picking up all the items that will affect your capital. So I want you to just make note of this so that we don't have to come back here. So current accounts, they had balances, so we're going to pick up the balances. Drawings of 37,000 for ban, 26,000 for J, all of this. So make note of this part so that when we go down there, we don't have to come back up. Alright, so their balances would have indicated that they remember we're only working with J, so J balance ED 2023 here. J balance BD was on the credit side. How do we know that? Let's look back. Sorry, I said I wasn't going back up, but I just want to ensure that you're following. So for J, it says credit 7,300. So all we have to do is go down and put it in on the credit side. 7,300 at the 1st of January. Then he had drawings. So let's do our debit side first. He had drawings of 26,000. Now this, we're putting everything that is coming out of his capital on the debit side because we're decreasing his capital account. So the drawings for 26,000 goes on his debit side as well as the interest on drawings of 2,700. On the credit side, we're putting everything else. So just refresh your memory of what else is there. So we have interest on drawings already, and we have drawings, and we also have his current account balance. So now we need salary and interest on capital to go on it. So I'm going to pick up those figures now. Alright, so it will be the 31st of December for both items. The partnership salary, so was 7,300. Sorry, was 36,000 and 7,800 for interest on capital, which will give us all the items that we have to put in his current account. So you're going to have to total both sides. 26,000 plus 2,700, that's 28,700. So that's 28,700. While on our credit side, we have 7,300, 7,800, and 36,000. And we're leaving off something. He also received a profit. Remember, his share of profit was 14,480. Let me just scroll up to show you that. 31st of December. So you always put the profits on the credit side as well. So my arrow. So that's 14,480. Alright, so add the credit side now. And do draw your lines until you're sure. Alright, you can see I have to remove my lines now, which is okay. Alright, so you should get 65,580. Alright, 65,580. So that now will give you 65,580 as your credit side minus 28,700. So put that into your, let me put the 65 on. So put that in your calculator and you will get your balance CD. So subtract the larger side from the Subtract the smaller side from the larger side and put the balance or the difference on the smaller side. So now both sides will be equal because we would have just balanced off both sides. So it's going to be equal on both sides. So we have 65,580 on both sides. So now remember that this partner will start with this new amount for the new year. So we put balance BD at the 1st of January. Twenty 2024 of what? The 36,880. Alright, and that would be the end of that question. So that's the answer to question 3. If you have any questions, please comment below. And if you want to see the other videos for this paper, please subscribe to our channel, share this video, and come back to this playlist.